Morning, morning, Gary. Morning,
Morning, Larry.
morning, Graham. Morning, B.
How's it,
Morning, good
guys?
afternoon, and good night, everyone
Yes, we've just
across around
traveled
the
the
world.
globe. Just traveled the globe. All right, so today we're going to talk a little bit about current events, and again, we're looking at some of the questions that we get from many of our investors. And one of the questions today is Bitcoin is one of the top three assets in the debt default scenario. So, what factors contribute to Bitcoin's resilience in such a situation? And how does it compare to traditional assets like gold or government bonds? And then we can also talk about the role of cryptocurrency as a hedge against these economic uncertainties. So, Bilal, do you want to
Yeah,
start us off here?
yeah, Larry, let me jump in there. It's a great question, and it talks to the very essence of what Bitcoin aims to be, which is uh, the bearer instrument, which gives you the ability to store value without any intermediary required to do that. And I think what was interesting is in the past few weeks, we've started to see um, bank concerns, bank volatility, bank failures. There is the concern in some situations that banks have a large amount of bonds in their treasury at this point, and if those treasuries were actually valued at fair value, not the whole cost, some of those banks would have severe solvency issues, and why that links interestingly into Bitcoin is when we had the failure of Silvergate Bank, Silicon Valley Bank, and the issues with Signature Bank and I think a few other banks in the US as well. Um, on that day, we saw that the correlation between gold and Bitcoin was at a record high, and that talks to Bitcoin's ability to be a safe haven asset in times of severe volatility. So, so this plays out where Bitcoin is most correlated to gold if there's a severe shock. If there's a slow drip um, decline in financial markets and people slowly erode in their value and are required to sell their most liquid asset, they are probably likely to sell their Bitcoin before they sell their house or their car. In which case, then Bitcoin could decline. But in a situation of a shock where you see a bank collapsing and a system collapsing in itself, not a slow deterioration. So if it is a severe shock, that would see Bitcoin start to behave more like gold. And why, if we had to try and understand why that actually happens, to buy a gold coin is it depends what size of a gold coin you're buying or on which exchange you trade paper gold. What are the fees of that particular exchange? What is the minimum size of a gold ETF that you can buy? And what are the costs of having that gold ETF, whether it's spot or synthetic, or buying that gold coin, and how do you store it, where do you keep it, how do you move it? With Bitcoin, for the younger um, investor mainly, the perception is that Bitcoin and gold are very similar in how they behave, but you can buy a much smaller amount of, you can invest a smaller amount of your available dollars to buy a fraction of a Bitcoin, a Satoshi, and store that cheaper. So what may happen is people who are not buying many gold coins, the Bitcoin story is more accessible to them. And then just to towel it into the third part of your question, which is bonds and debt. Um, I think what we see with interest rates going up is that um, you know the probability of defaults and volatility does increase. So a lot of money does flow into bonds out of equities, but the risk in terms of how bonds sit does actually increase. But I mean, you are getting paid. You are getting paid for that risk. So from a responsible investor perspective, what you'd want to do is obviously have a balanced portfolio across bonds, gold, crypto, options on great equities, which you think could do well, other commodities, which you think could do well, maybe even fine art, and if you can get yourself a nice NFT somewhere. It's all about diversification and not putting all your eggs in one basket, or taking too much of counterparty risk in this world. So you got to balance your counterparty risk as well, which is what we try to do in Spectrum. So when you look at Spectrum, we managing that counterparty risk in a world where the institution that you face could collapse. We are allocating to various cryptos across the board, and we're well placed to be that piece of your investment portfolio that gives you the diversified crypto risk off alternative play to the potential debt crisis looming.
So, Bilal, the cryptocurrencies as a hedge against economic uncertainty. When that economic uncertainty starts materializing, like it is now, how is, or is it in your opinion that cryptocurrency becomes a better place to put money, a safer place to put money? And during these times, which we'll call financial instability, it's attractive because why? What do you
Great
expect it
question.
to do?
Yeah, it's a great question, Larry. So I don't think that cryptocurrency. Okay, so let's not talk about cryptocurrency. We're talking about Bitcoin in particular here, because each
Okay,
cryptocurrency has its own story and its own functionality. So we might our team likes GMX and GLP because that's a great DeFi exchange play. We like Ethereum because the future internet and application layers will all be written in Ethereum. Your question is about Bitcoin in my mind, which is
okay,
the risk off element when looking not at economic uncertainty, but financial system uncertainty. So economic uncertainty is a different problem. That is due to trade, supply, demand, wars, all of that. Right? I think what Bitcoin is trying to help us to de-risk is a US debt financial system that is, and the monetary devaluation that has happened with the excessive printing that we always talk about. So Bitcoin is not trying to solve the world's economic problems. It's just it's just an alternative way to store value in a world where the interest-based system, um, specifically in countries where there's been a lot of stimulus and now interest rates have been hiked, and then the question is whether or not we end up in stagflation or
Well,
I think we're reaching a point where interest rates can't be increased much further, and inflation may not yet be under control, which puts us in a precarious position. And in that situation, you may want to be holding
well,
alternative asset classes.
just to add to B's answer there, Larry. What's interesting, I found an article here which I think answers a lot of that. Sorry, I can hear a bit of an echo. I hope it's not too bad on your side. But according to Standard Chartered Bank, a U.S. debt default would make a long Bitcoin, short Ethereum play quite a good little trade, given Bitcoin's greater adoption as a form of payment and a store of value. So they're going to say any other cryptos, as long as they are not linked to the U.S. economy, would also see a bump in value. So it's so that actually answers, and that's not our opinion. That's Standard Chartered Bank. That's quite interesting, I thought.
Well, when you talk about the potential default, right? And really, all it is all the machinations of a potential default. I can't imagine we're actually going to have
Well,
one that's going
exactly.
to.
I mean, Larry, to me, it's just politics.
It is, but the market, at some point, the market doesn't get comfortable with all this Russian roulette, if you will. Um, Let me jump just to Graham for a minute because I know that I shared this question with you earlier. So, what is your thought on the investor's sentiment right now and I'm going to talk about your average, um, let's call it cryptocurrency investor, in particular Bitcoin. Um, do you think that the closer we keep getting, and all of a sudden, oh boy, I better get some money out of the U.S. dollar and into Bitcoin or other cryptos, or do you think it's the type of thing right now because of I'll just call it the volatility of the world markets and cryptos? Do you think people are going to almost be like, oh, I don't know what to do. I'm just not going to do anything. I'm too scared. What's your thoughts?
So I'm actually going to address the first topic first, and I'll come to your second question. So just on the topic of the survey that puts Bitcoin as a favorable asset to hold in a crisis scenario, for me it's very simple. In a crisis scenario, one of your biggest risks, if not your biggest risk, is counterparty risk, right? And that's where Bitcoin holds its own because it is free of counterparty risk. It lives on a place called the blockchain, which is immune to bank failure, to government failure, to political, social unrest, war, etc. All you need really is to have a hardware wallet with your Bitcoin on that wallet, or you need to have the 12 numbers or words in your head, and you can unlock your wallet. So that's really I would say, the main reason why Bitcoin would be a favorable asset to hold under those circumstances. And gold is quite similar, in that it doesn't have a counterparty risk. Gold's problem is that you have to carry it in a suitcase in your pockets or more imaginative places if you need to transfer it from A to B. So that's a benefit of Bitcoin over gold. So that's really, I think, the counterparty risk benefit that Bitcoin has in that type of situation. Can you ask, you were then just looking for general market sentiment, Larry, at the moment? Is your second question. So, look, I think the world as a whole is an unattractive place to invest right now in traditional assets. That for me is the bottom line. I think if you, my tune hasn't changed for the last couple of years. You've got PE ratios and valuation metrics of equities that are still very high by historical standards. You've got bonds, which, although interest rates have moved higher, are still low by historical standards, which, if you just an investor for yield, you're going to battle to retire on, a 3 or 4% yield on your investment. So where else do you look? Outside of stocks and bonds. It's, I think that's one of the reasons that Bitcoin is attractive, and why many people are drawn to the space is because it's a place where you've been able to achieve really good returns over a longer period of time. And obviously you need to then stomach the volatility. But I think that's been one of the major pulls of crypto, looking big picture. And right now I'll maintain that I've been, my best assessment is that the bottom is in. We reached $16,000 for Bitcoin at the end of last year. We've rallied strongly this year. We're having a little bit of a pullback at the moment. I think $25,000 would be an attractive entry point from the current price of around $27,000. And for me, the aim of the game is to dollar cost average on any pullbacks that you get, and then just look to increase your crypto holdings, because I do think that we are more than likely in the early stages of the next bull market.
So, when you look back, and I only remember looking back to Thanksgiving of 2017 when I bought 6 Bitcoins at about $3,000 a Bitcoin back then. And when you think that, well, let's just use a number of whatever it is, 27 or just 30 to keep it simple. That rule of 72 is, over a 6-year period, a 12% return, which is pretty good. My 3,000 would have gone to 6. And I'm not even 6 years yet, which will be this November of when I bought it, and I'm already up 10 times. Yes, I was up 25 times, and everybody says, "Oh my God, it was at 70. Look how much you lost." Well, wait a minute. I bought this with a long-term view, and I bought it with a 5 or 6 year outlook, and so. Yeah, I'm only up 10 times right now, but that's pretty darn good. And yes, as long as you love roller coasters, it's been a fun ride.
Yeah.
You feel pretty good that this 25,000, we shouldn't, in your opinion, Graham, you don't think we're going to 60, 70, 80,000 back down to 25, 30? You're not looking for that kind of crazy volatility over the next 5 or 6 years, are you?
Look, 5 to 6 years is a long time. But the thing that guides my macro thinking with regards to price of Bitcoin in particular is the long term price chart and marking the halving period, which we've covered on here before, which happens approximately every 4 years. And the rule of thumb is about 500 days. So let's call it just short of 2 years before the halving is typically the start of your bull market, and 500 days after the halving is the top of the market. It's definitely not going to be accurate to the day, but broad strokes, if you have followed that buy and that template as for your buy and sell actions in the market, you would have done incredibly well. So that price action is still valid, even through the last market cycle. And until that breaks, that's the template that I'm going to follow. And the halving continues to show that it's a significant event, and the price has been moving very much in line with that halving cycle. So where are we right now? The halving is next year. Let's call it 12 months away. So that all things are pointing to me that we are at the beginning of a new bull market. So now for me is any entries above, or let's say below 30,000. If you take a longer term view, and typically your bull market lasts for 3 or 4 years, then over the next 2 to 3 years, if you're getting entries below 30,000, which is what we're at now, I think you're going to be well positioned.
Okay. Last question about just in particular on the Bitcoin is we're seeing a little bit more investment involvement by institutions purchasing that. You see that as something that is going to continue. More and more institutions are going to be investing, and assuming they do, that would probably give a lot of confidence to the marketplace. What's your thoughts on that?
Yeah, I do for sure. So, I mean, I think if you think about it broadly, we've been through a couple cycles already. Let's call the first bull market. What is it? Well, it wasn't necessarily the first, but let's take the 2013, 2014 bull market. That was a bull market where Bitcoin made its biggest gains, but the investors were limited to your tech geeks, right? These were the guys that were the very, very early adopters. There were gaming competitions, and people were being paid like 1,000 Bitcoin for winning the gaming competition. Ridiculous stories like that. People buying pizza with how many 10,000 or 20,000 Bitcoin, right? So that was where we all wish we could have bought our first Bitcoin. That was limited to, let's call it the tech geeks, right? Then your second bull market, 2017, was very much retail driven. It was a space that the institutions weren't interested in getting involved in. And there, your early retail speculators were some of the biggest beneficiaries, right? And this is where your typical exchanges, your Krakens, your Bitstamps, Coinbases were born. Then the most recent bull market that we had, 2020, 2021, that was driven largely by institutions. So now you saw the institutions come into the space. Yes, there was definitely still a lot of retail euphoria that pushed the price up, but this was the first time that the institutions could really be involved because you had institutional custody and you had appetite in that capacity. So I think in many ways, institutions have kind of dipped their toes in, but they never went full tilt, right? You couldn't call up your bank broker and ask to buy Bitcoin. We didn't get to that level. And then everything gets put in ice while the market's going down and demand for crypto almost disappears completely. And then you had all the failures of FTX and Luna and Celsius, etc. So that makes everyone nervous. What's going to get people back involved and what's going to get institutions back at the table is greed, right? We think that institutions are different to retail, and they are, but still they're driven by the same things of fear and greed. So once they've got every second client phoning up asking how can they buy Bitcoin and willing to pay brokerage for it and willing to pay custody fees to have it stored, then the institutions are going to come back to the table because the demand is going to obviously outweigh any fear or reticence that they had. So that's the nature of the market. And I think we're still in the early stages of this bull market, and the market's still healing, right? People are still recovering from the trauma that they experienced last year in 2020. And you need some big green candles and big returns to have that emotion of greed start to overwhelm that emotion of fear. So what do we want to do as investors? We want to be ahead of that curve, right? So that's why we've been buying Bitcoin and Spectrum since the beginning of the year. We don't want to wait until we kind of the last guy on the train. We want to be the first guy on the train, identify the new trend, ride it up to the top, and then ideally look to jump off that train before it heads towards the next cliff. That's really what we're looking to do, and we're not going to get that right 100%. But our job is, and our objective is to cushion some of the blow to the downside by reducing risk and obviously take advantage of attractive pricing when it presents itself, which we've proven that we've been able to do that successfully over the last 3 years.
Now, Larry, if I might just add a bit over to Graham's story there, where we had the era of the gamers and the miners leading the first Bitcoin rally, and then the retail market leading the second rally, and then the start of the institutions leading the third rally, and now getting to what is brewing being the fourth rally. I agree with Graham that this will be when institutions come in with both feet, but the big cherry on top will be if sovereign buy-in comes in with 2 feet as well. And I mean, we've seen some small countries like Central African Republic and really smaller sovereigns touching the crypto space in a meaningful way to their country. But if we enter a world with increased sanctions and increased surveillance and financial systems being weaponized, there is more reason than ever before for sovereigns to hold a portion of their wealth in a Bitcoin or gold or something outside of the traditional financial service system. So yeah, I think that could also be a big factor in driving up Bitcoin and crypto adoption.
I think that's a great point, B. Yeah, maybe this next bull market will be signified by the entrance of sovereigns, of governments into the crypto space.
I mean,
that'd be really, really bullish.
Absolutely right. The only thing that would be interesting is the tug of war between centralized and decentralized positioning of these cryptocurrencies. The sovereign participation, I think, is more aligned with a centralized system. which is not going to be very appealing or attractive to the whole idea of why this was so attractive type of currency right from the outset. We talk about not being, this potential US default. If that was a centralized cryptocurrency in the US, that wouldn't do very well. But Bitcoin will do well because it's decentralized. But anyway, guys, Larry, over to you. I think we've overshot our time. You're on mute, Larry.
Can you guys hear me?
Yeah.
Oh, good. Okay. So I was doing a little quick research on the retail marketplace. And what's interesting is the biggest buyers of cryptocurrencies are the millennials. They constitute 57% of all retail crypto bought. And worldwide, only about 10% of the population has touched or bought crypto. So you could see 90% of the world is still available and still kind of waiting. And by the way, of those millennials, which there's out of 8 billion in the world, there's 2 billion millennials. 60% of the millennials are in Asia and abroad, not anywhere near here in the US. So interesting what's going on in the marketplace and where some of the opportunities really exist. But I think, as you said, the El Salvador and some of the smaller countries, and I think you'll see those smaller ones coming on first, only because they kind of need to. Countries like the U.S. and Great Britain, if they were allowed to let themselves fall in, then they would lose the control that they ever so desperately need and want to maintain. So we'll probably see a little bit of that. Just jumping to two more points, and I think Bilal, this one might be for you. Ripple's legal battle and its impact on the cryptocurrency industry. Maybe if you just want to touch real quick, what's the main issue, and what's the problem, and what are they looking to come out of it as well?
Yeah, listen, I'll give a bit of a high level, but I think Graham, you'll actually be better placed than me to give the finer detail because we've actually got a great Ripple play in our Spectrum portfolio, which we've been holding for quite a while. Yeah, Ripple serves as the potential layer. So Glenn talked about the central bank digital currencies, and in Spectrum we've positioned to benefit from either scenario where sovereigns and institutions start to buy more Bitcoin and other cryptos, or the scenario where sovereigns move to a central bank digital currency world, and where then Quant or Ripple end up being the settlement layer for interchange. And so we've had a holding in Ripple for quite some time now, and the issue has been whether or not Ripple has been whether or not Ripple is a security, and how that is treated by the SEC. And I think there's just been a lot of delay in kicking the can down the road, which is what Ripple is pushing back on. Graham, do you maybe want to just fill in what more recently what we've been discussing on Ripple side?
Yeah, so I'll briefly cover it. So as you mentioned, the SEC is wanting to position XRP, the Ripple token, as a security, because then there's potential big taxes, etc., that can be levied on the gains that Ripple as a company made from issuing this token. Obviously, that's not in Ripple's interest for it to be a security because of the upfront financial implications as well as future implications. So what Ripple wants is like B said, to offer their Ripple net as the settlement layer for central bank digital currencies. And additionally, they want to have XRP be the liquidity token or liquidity layer to settle various transactions. So if you want to go from, let's say, the digital euro to the digital yuan, typically you won't go from A to B, you'll go via XRP as the liquidity layer to facilitate greater liquidity across the board for various settlements of these central bank digital currencies. And if XRP is a security, and you have to go through a security every time you want to settle a trade, that's just not feasible either. So there's two main reasons, the financial implication in terms of tax, as well as the function of the liquidity layer that XRP will potentially play in that system. So for both those reasons, Ripple is fighting hard, for that token not to be seen as a security. I think because the SEC has deep pockets as well as Ripple, and they're happy to pay their lawyers a lot of fees to keep postponing the ultimate settlement. That's the reason it's taking such a long time to materialize. I mean, we're going to be patient. Like B says, we've got a decent position in Spectrum. We are of the opinion that in all likelihood it will be resolved in Ripple's favor, either through settlement, more than likely an out-of-court settlement. And that news, along with the potential for XRP to actually play that role for central bank digital currency settlements, is very bullish in our view. So I think that there's a very good asymmetric risk reward to that trade in particular that we like a lot.
So, Graham, just one last thought on that. If the XRP token is really nothing more than being used for purposes of moving between digital fiat, right? So it's more of it's not like a stock. So why would the SEC? Why wouldn't they let that be what its function is?
You'll have to ask Gary Gensler, Larry.
I have, but he said he doesn't really know anything about cryptocurrency.
Maybe we can leave this part off. I'm going to need to give you quite a long explanation to try and get in the mind of the SEC. So maybe we can leave that for another time.
All right, save that.
And I think that Glenn has to run as well. I've got a meeting in a couple of minutes.
Yep.
So, yeah.
This will conclude.
Thanks, guys.
And,
thanks very much, Larry. Thanks, Graham. Thanks, Pete.
Excellent.
Thanks, guys.
Thanks, Larry.